Hello, everyone, and welcome back to this financial podcast. It is April 23rd, 2018, and I want to talk about a position that we recently got into as well as something I'm looking at right now. So there's a lot to talk about today, and it is about Ford Motor Company. This is a position that was recommended a few weeks ago at around the 1090 level. It moved up pretty nicely from there, and now it came back down again. And today is a strong day, so it's ahead of the entry point, and of course there was a dividend payout during this time a few days ago on the 20th. So part of that downturn, what was built in is that dividend payout. When a dividend goes ex-dividend date, of course the stock is affected to go down depending on what was going on with the stock that particular day. If it was going up, it would be deducted from that movement. Now, as far as where the stock is headed, I am looking at a target right now. I'm looking at a target at around in the 1160 range. It is going up. It's making an uptrend. However, it's very choppy. And if you look at the chart right here in front of us, you can see that it made this double bottom. And I already discussed this as part of the strategy to get in. And it's really interesting. It seems to be making repetitive moves. I mean, you can see this coil spring formation comes up, chops back down. It actually made a low right here, and it broke through this low, but it's still considered kind of like a double bottom. Now it comes back up, chops back down again, comes back up, chops back down, and today is a strong day. So this is pretty interesting to see the way this is moving. It's a very repetitive type of uptrend, and it is kind of choppy. This is not a strong move up. So I'm looking at possibly a exit in around the 1160 range, which combined with the dividend payout should be an 8% return, which is pretty good. That will be a target in this stock. Now, I'm also looking at another stock, and this is something I've been into recently, and that's Verizon. So it is Verizon once again. Now, why Verizon? Now, I don't know if you've heard recently in the news, once again, there are potential merger talks between T-Mobile and Sprint. Now, they had talks before, but the talks stopped, and now they're up again. Now, why am I bringing this up? It is fundamentals, but fundamentals can move markets if you know how to use them. And I actually did use them in the past, and it did quite well. Now, I did a podcast a while ago, and it was called Walmart versus Amazon. And during that particular time, Amazon came out with this big news that they were purchasing Whole Foods. Now, it was really negative for the retail sector. I'm not going to get too much into it. I put a link below the video description and you can watch it. But when this news came out, the retail sector got hammered. Even Walmart, which is the most defensive in the retail sector, was down around 7% that day. And I'm like, wait a minute. You know, this is not negative for Walmart. If anything, it's positive. I mean, they're buying Whole Foods because Whole Foods wasn't being very successful. They weren't making record profits. Their stock wasn't making record highs. No, their stock was not doing well. The company was not doing well, and that's why Amazon stepped in and purchased them. Now, what happens when you purchase a company? You need to spend a lot of money, all right? Which means you take on more debt. And don't forget, when you purchase a company, you don't just purchase their assets, you're purchasing their liabilities. And that means you're purchasing their debt. So it's not necessarily a good thing to do, because if it doesn't go well, it can be bad news for the company that's purchasing them. And I'm like, you know, I don't understand why this is such bad news for the retail sector. You know, they're going into an industry which is not what their niche is about. They're the opposite. They're e-commerce. They're not bricks and mortar. Isn't it supposed to go the opposite way? That e-commerce is taking over bricks and mortar, and now they're going into bricks and mortar instead? So I'm like, wait a minute. Something is not right here. Why is this so bad for Walmart? And guess what? It wasn't. I mean, the media was saying it's terrible. It was a lot of news, a lot of bad news. Sell retail. Amazon's taking over. And I'm like, no, that's not what's happening here. If anything, it's good for Walmart. It's just short-term bad news, and it's just fear, and people start to sell. And that is a buy signal. And I remember Walmart was at around the 73 level. It didn't take long for Walmart to hit $100 a share. That is a big move. And I remember saying that, this is a good buying opportunity at around the 73 level. And it didn't take long for Walmart to hit $100 a share. So why am I mentioning this? Because now we have a potential merger between T-Mobile and Sprint. Now, if these two companies merge, is this going to be a terrible thing for Verizon? I don't think so. These companies are very small compared to Verizon. They have a much larger market share, and they're much more diversified than Sprint and T-Mobile. And if they're purchasing Sprint, it means Sprint is in trouble. I mean, Sprint's stock is down 29%. They're not growing as much as they did. I mean, it sounds like that this company is in trouble. So if T-Mobile purchases them, they have to purchase not just the assets, they have to purchase the liabilities. They have to go into debt to purchase the company, and they also have to take over the company's debt itself. So it's not necessarily going to be a big positive for T-Mobile. And it's not like the rumors of when AT&T was going to purchase T-Mobile years ago. I mean, that's different. AT&T is already a very big company. If they would have purchased T-Mobile, yes, that's a very big move to make. And it could have had an impact on Verizon, but I don't think this is going to have an impact. It may be negative for the merging companies because of the position that Sprint is in and because of the size of both of these companies. So who knows what might happen. Now, why am I talking about this? Because short-term news can be a lot of fear. People can take it the wrong way, just like they did with Amazon and Whole Foods. They can say these companies are combining. There's going to be only 3 companies, not 4. You're going to have a combined company of Sprint and T-Mobile, which is bigger. Now they're going to have more spectrum. They're going to have more subscribers, and it's going to make them larger. Potentially a bigger competitor for Verizon and AT&T. So you would think that it's negative for Verizon, and then what can happen is fear will take hold. Things aren't the same anymore. Uncertainty. What happens? Investors start to sell. So you can see, who knows, a big down move, right? You could see, just like Walmart, it can go down 7%, maybe more, 10% in a day. And let me tell you something. If you look at Verizon right now, their PE is so low, it's actually considered the cheapest stock on the Dow. So if it's already considered undervalued, and from there it goes down even more than that, I mean, you have a company that's rock solid, good financials, it's a great dividend, it's close to 5%. After that downturn, it's going to be well over 5% as far as the dividend, and it's going to be even more undervalued. So I'm just saying, if this happens, I don't know if it will, if this merger does happen, this can be a good buy signal. You know, they say buy the rumors, sell the news. Well, in this case, it's going to be buy the news. All right? Wait for it to happen. If the stock goes down, if it's a big drop because of that news, that is a buy signal. So that's the next potential entry that we're going to take. So just watch the news, see what happens. And besides this potential trade, there's going to be more trades coming up. So make sure to subscribe to find out the next podcast that's coming out. Feel free to leave comments. Please like up this video, and thank you for tuning in.